Hey, good morning. Welcome to the mortgage rate forecast and news for May 25th. Man, I've been slacking off on vacation, so haven't done this. Skipped a couple weeks. We'll just put it that way. I skipped a couple weeks. So here's what we got going on with the market. Let's get started with the charts. We're currently trading at 103.3 this morning. So bonds are actually doing pretty darn well. You may say, well, Scott, that's not as good as what we were doing, around this time last week. But just the fact that we're holding 103 is actually pretty impressive. The support, sorry, I didn't put it in the charts, but the support's going to be coming in below us. I think our best level of support is about 102.80. And 103, though, if we can maintain a close above 103, it's kind of a big deal, guys. 103, if you look at the charts, just going off the charts, guys, 103 has been a really big thing for us. So if we can maintain closing above 103, especially today, that could be helpful. There is big news coming out tomorrow, though. Only thing out today, though, is jobless claims. They were way better than expectations. Dow's doing a little bit better, but nothing too crazy. It wasn't really a big market mover, and there's really not a whole lot of news today. So to kind of quantify where we're at, Freddie Mac reported for April the average consumer received a 4.05 rate and paid half a point to get there. But that's when bonds were trading and averaging maybe around 102.80. So the average consumer may see something like 33 cents better on bond prices, and that's going to translate to, instead of paying half of a point, maybe you're going to be, closer to an eighth or, a quarter. So not a huge difference from last month, but still slightly better, guys. Okay, so let's see how I did. Last projection, it was a hit. And so I hit the mark. That's always nice to see. As far as our forecast moving forward through next Thursday, I'm gonna say that bonds are gonna go between 102.80 and 103.20. That's about a 17-cent gain from where we're at today right now, or a 23-cent loss. So we are in kind of the middle of that trading range. How we flirt with 103 is going to be really the big determining factor. The analysts that I follow are both neutral and bullish on the short term, and so kind of like right in between, because we do have an upward trading channel. So, if it was me and I was a gambling man, I would say, yeah, if I didn't have to lock in my loan, maybe I wouldn't. Maybe I wouldn't. I'd ride the market just a little bit and just keep an eye on it. And so, but locking's always the safest thing to do. Anyway, that's it for now, guys. I'll see you next week. Love to hear your comments down below. If it's your first time on the page, like it. If you want to get updates when we record, we only do it about once a week. Hit that ugly guy on the left. And if none of this made sense to you, it's okay. Top right, Mortgage Bonds 101. It'll teach you all the basics that you need to know when you're trying to lock in the best mortgage rate. Anyway, that's it for now, guys. We'll see you next week. Have a great 3-day weekend, and we'll talk to you soon. Bye-bye.